Good afternoon. Welcome to the stream. Welcome to this week. And gosh, what a week it's been. Oh my gosh, the end of this week was definitely very, very, very busy. I think most of the news stories I've got for you tonight all happened within a day or two. So anyway, we got lots of news. It's gonna be a great show. It's a good afternoon. Hopefully it's still warm here in Ottawa. I don't know what it's doing in your part of the neighborhood, but it still feels a lot like summer. I'm liking it. We can hold on for a bit for sure. Something new is going to be dropping on Tuesday. Well, channel members will be able to see it tomorrow. So we're doing a series. And this series is that windfall series. If you were here on Friday on the live stream, I talked a little bit about it, and I said there's going to be 3 of them. We're doing 3 of these windfall videos, and I let the folks in the chat decide which one is going first. So, what is the windfall? First of all, it's basically, what do you do if you got a big chunk of money drop into your lap? So for these videos, we're going to look at $100,000, and we're just going to kind of assume that maybe in this scenario you're not an investor. This is your first time hitting the investing links per se. So the first one we're doing is going to be the hybrid. So both growth and income together. So that'll be the first one. That's going to come up on Tuesday. We're going to build a portfolio. We're going to build a portfolio in that video. Then I'm going to do it every Tuesday. So the next 3 Tuesdays, we're going to then do, well, I'll probably, you know what? I will let you guys vote on on Wednesday's market close, which one goes next, whether it's the income or the dividend growth. I have a feeling, knowing you guys as much as I do, I have a feeling that it's going to be the income one that we're doing next after the hybrid one. So I'm looking forward to this one. I scripted it today. It's a little bit longer than normal, but it should be good. It should be good. I do have to film it and edit it tomorrow, so it may be a little bit. It may be an hour or 2 later than it normally comes out for the channel members tomorrow afternoon, guys. If you're a channel member, it might be a tiny bit, but I'll try. I'm going to put my nose to the grindstone in the morning and try to get it out by 2 p.m. I normally get them out by 2 p.m. All right, guys. Now, let's jump into the news. We'll get our first story done before we hit the chat, and then we'll hit right into the chat. I can't wait to hit the chat. So jobs. Oh boy. We had, Canada lost 66,000 jobs in August. Oh boy, that's a lot of jobs. And that did drive our unemployment rate. It all the way up to 7.1, which is really interesting because the analysts thought it was going to be 7%. So we outdid. We were worse than we were expecting. So yeah, 7.1. That's pretty rough. That's pretty rough. In fact, oh boy, this is the highest unemployment rate since 2016. Now, we're not including the pandemic. Yes, when we were all at home, the unemployment rate was a little bit high. But outside of the pandemic, yeah, this is the worst we've seen, in a decade. So most of the cuts were in part-time work, which is really interesting. So part-time jobs, we lost 66,000. And yeah, that's out. Sorry, out of the 66,000, we didn't lose 66,000 part-times. We lost 60,000 part-times out of the 66,000. All right, there we go. So we lost 60,000 part-time. We lost 6,000 full-time. Provincially, Ontario and BC saw the worst of it. They saw the bigger declines. Oh boy, yeah. And the losses this time around, they weren't just in, up till now, they've mostly been in manufacturing and transportation. But they're now starting to hit some of the professional and scientific services as well. So this signals that the slowdown that we're currently experiencing, it's spreading beyond your traditional blue-collar jobs. So it could get worse. It could get worse for sure. Obviously, U.S. tariffs. Those U.S. tariffs are a leading factor in this slowdown. They are helping big time to, well, slow down growth and, of course, employment being slowed down, unemployment's being sped up. That's got to keep that in perspective. Now, this very weak labor market data combined with the fact that we have a shrinking GDP, so we talked about that last week, this is really putting the Bank of Canada into a little bit of a pressure cooker, if you ask me. So markets are now pricing in a 90% chance that we're going to see a rate cut here on September 17th. That's our next one. It'll likely only be a 25 basis point cut, but I'm calling a cut. I'm calling a cut. I can't see them not. I can't see them not doing it. Now, if we look a little bit to the south, the Americans, they're having a little bit of issues too. They had their jobs report also drop on Friday, and they added 22,000 jobs. Now you might be saying, "Oh, well, they're doing much better." Well, they were supposed to add 76,500, so they came in a lot lighter, and their unemployment rate did rise up to 4.3%. It was at 4.2, so their unemployment has gone up. Their job market is softening quite a bit. That's going to make it really interesting the 17th, because they're also having their rate cut decision, the Fed, on the 17th. So could we see, and I think we might see a 25 basis cut there too. So we could see double cuts on the 17th. That's going to be very interesting, but let's hope this job slide can stop. Unfortunately, we're just starting to really see a lot of that damage from the tariffs, and that might push us up to 7.2 by next month. I hope I'm wrong. I hope I'm very wrong on that, but it is a possibility for sure. Okay, new story one is out of the barn. Sure, why not? Let's hit the chat. Jersky first in the house with a good old hello. Has anyone watched Mike at Health and Wealth? He's a big yield max guy. Not for me, but interesting. Yeah, it's interesting. When yield max just had its synthetic covered calls, I dabbled a little bit with them, but they made me nervous. I will admit. So I haven't really looked that much, but now yield max has gone beyond covered calls. Beyond synthetic covered calls. They got, like, for example, UTLY, and they've got a few others as well. So I do want to get back in there and take a look at yield max. I mean, here's me saying that. So I do need to do a yield max. That's probably going to happen before the year's out. I will definitely get in there, and we'll do a video dedicated to yield max and look at all the different funds and what other offerings they have, and maybe figure out whether or not it's worth it. We'll find out. We're gonna continue along. A cowboy is in the house with a greetings all. Mine has been slightly green. I'm thinking that is in reference to the pinned question, because I just pinned the question before Jersky. Or Gursky. All right. Why? I have never had problems with Gursky's name. Now I am Gursky. All right. Yeah, I just had pinned the comment. So I think that's in reference to that. So, how was your week on the market? Jonathan in the house. Am I late? I don't think I'm early. Jersky says, if you ain't first, you're lost. Or you're last. You're last. Oh boy. I can't read today. What's going on? Bismarcky is in the house with a happy Sunday. And Jonathan says, so true, Gursky. There we go. I got it. Jonathan says, at least I'm number 2. I don't know who number 2 is right now. Now, you guys may notice, and I mentioned this before, some people have numbers next to them. Now, what those are is, and I'm just gonna pull this list up over here on the side screen so I can see it. Those are what's called top fans. So every time you interact with the chat, you get some points. And And right now, I guess they're XP points. Right now, we got a three-way tie for first. Even though it says Jonathan 1, Cowboy 2, and Jersky 3, they've all got 75 experience points. So they're fighting out for the top. And then we got a whole bunch of people with 25. So I don't know exactly, like, I don't know if it's like every time you post you get 25. I don't know what the points are, but hey, feel free to fight it out for first. I can call you out. You know what? At the end of the show, I will return to the leaderboard and we'll see who's first. I'm kind of curious. I will also say, I think if you do supers and things like that too, it gives you even more points. But, hey, get to first however you can. That's what I say. Cowboy is calling me late. I was about 30 seconds late. It's because, actually, you know what happened? I was trying to figure out all this hype thing, because I don't know yet if anyone has hyped one of my videos. I don't even know if that's available yet, even though it's supposed to be available in Canada. So I was looking at something on YouTube to tell me how to find out if I had a hype on a video. And then I was trying to figure out, well, how do I do that? And because they weren't super clear. And in the process of that, I ended up going 30 seconds past when I was supposed to start the countdown. So, yes, I was 30 seconds late. I apologize. Gursky says, I'm either early or real late. And Jonathan says, oh, wait, I'm number 1 in the comments. How the tables have turned. Stan says, happy Sunday, all. MC's in the house with a good afternoon. And Rory says, hi, all. Just watch Adriano again with the Manitoba guy switching from his financial advisor to PII. Yes, absolutely. PII, I think that stands for passive income investing. A term Adriano uses it quite a bit. But yeah, it was one of the testimonials because Adriano does a lot of financial coaching. And yeah, it was a testimonial. Somebody wanted to come on and just let people know how advice from Adriano turned their life around. So, and speaking of Adriano, that live stream that we did, I was talking, actually, I brought it up on Friday because it was getting close to breaking 5,000 views. That's a lot for one of my live streams. Like, I'm tickled pink if we break 1,000. But that one's broken. It has now broke a 5,000. I think it's like at 5,030 something. So that's pretty darn cool. I'm liking that. But yeah, no, that is a good video. I did listen to that. I was doing something else, but I did listen to. I think there's 2 parts. I only listened to one of the parts. Larry says my 10,000 shares of Scorpio Tankers. So STNG is up 39.87 to 53. Holy banana bread, that's not bad. I value the company at 120-140 per share. I expect 8K to 1 million in profit. Sell time likely 2027. That's a long swing. But you know what? Sometimes the long swings can make you a lot of money. So there's definitely no problem with that. A liberal taking a customary swipe at the liberals. Liberals equal no jobs, big taxes. Oh boy. And we got Mary in the house saying, good afternoon. Guys, if you've not yet hit the like button, Mary's our official captain of the like button. And if that number doesn't get up there, she'll be in here telling you guys to hit it. So just do it now. Hit it. Get it over with. I'm going to have some coffee because you guys are all busy right now hitting the like button. Oh gosh, so good. Jim is in the house. I am here. All right, and Gursky says, whoops, lower rates means possibility of higher stock prices. It'll be interesting to see. Well, the lower rates, if they do lower the rates, I'll tell you one group of people that are going to love it. 2 groups, REITs and utility companies. You might see a little bit of a tick up in both of those if we get this cut, and I think we're going to get it. Cowboy says tariffs are not the issue. It's the government not allowing any expansion in the energy, mining, and construction markets. All right. Well, I will say, Cowboy, I do have a story coming up. That's this ties right into it. It'll be interesting. It's coming. It's coming. Don't worry. Paul says liberals equal announcements with no action or completion. That that is what we've been talking about. Like they've been talking the talk, but we do need to see them walking the walk. We need to see some movement on some of these things. And there was a document that got leaked. A leaked document hit the news on Friday. We're going to talk a little bit about that in one of the news stories coming up. So they might be preparing to walk, but I hope so. Because I'll tell you, if they don't walk the walk, they are going to, well, they're not going to last 4 years, that's for sure. Rory says, all this time with Carney, it's all talk and no action. Yeah, and this is something Pierre Poilievre has pointed out. Pierre has been saying he's had the whole summer to get some stuff done, and nothing's gotten done yet. So, let's see something. We have Parliament coming back, and oh boy, I can't wait to watch the first question period with Pierre versus Pierre versus, I was going to say, Mark. Yeah, Pierre versus Mark Carney. But I just can't wait to see it. It's going to be interesting. All right, 25 XP. And then there's a delay when it adds another 25 XP. Okay, Paul's taken two comments to get that out, trying to double the XP. I approve. Silver Bear says, Larry, congrats. Also has 3.1% divvy. That's not a bad thing. I like that. All right. Kelly, so yeah, I like it. Three Kellys. A Canadian YouTuber had a video about retirement planning and was using an app where he could try different RRSP TFSA scenarios. Anyone know what it could be? I'm not sure. I know there are some people have individual, like some of the people who are a retirement channel, like some of the actual retirement channels, some of them have built in their own apps. Some. Others do have commercial software as well. So I'm not sure which one it is. If you watch this recently, you could always, this is what I would do. I would go back through my history, find the video, and leave a comment for him. And just say, hey, I like this app you're using. What is it? And you'd be surprised. Hopefully he reads his comments. I try to get to all of mine for sure. Jay says, hello all. I had to prep my furnace this week. It's only 17 degrees Celsius here in Winnipeg. Yes. Twice a year in the spring, basically, when we switch from the air conditioner to the from the furnace to the air conditioner, and when we switch from the air conditioner to the furnace, that's when I change those filters. So I'm probably going to have to do that one of these weekends. We still have not used the furnace. We have used the air conditioner this week, though. Joe Smith says, hi, thanks for your viewpoints. Canada needs more of this content. Oh, you're welcome. David Anderson saying, Canada has been trending down for years. To blame it on tariffs is naive. The destruction of Canada is the globalist plan, and Carney and JT are globalists. So Justin Trudeau. Okay. That could be, I don't know. I do know that I'm sort of, and this is that thing, I think last week I mentioned about Charest and how he had said that Donald Trump's tariffs are actually one of the better things to happen to Canada because it's going to force us to get our crap together. That's probably one of the first times I've ever agreed with Charest, but I think, yeah, I think we have to do it. And, I don't care what party, I don't care about the parties at all. I just want to see, I want to see something done. Actually, the one person who's been saying exactly what I think we need to see has been Doug Ford. the Conservative Premier of Ontario, saying that you know what, don't worry about your colors, just work together. Let's get stuff done. Let's get Canada fixed. That's what I want to see. Will we see it? Oh boy, I'm skeptical. I'm skeptical that we will see it, but well, Parliament opens soon. Let's see what happens, guys. Let's see what happens. I will say this: I'm probably going to have lots to complain about. Paul says Mark Carney canceled him being a question period. Do you know if this is true? I've not heard. This is the first I've ever heard of that, Paul. So right now I'm skeptical that it's true. I'm really skeptical that it's true because if he did, that would create a poop storm. That would create a poop storm for sure. I don't think he did it. I question that one. I question that one for sure. Jersky says, I'm excited for Evolve's Maple. So yeah, so Evolve has 2 new ETFs coming out, Biggie and Maple. I will be doing a video on them sooner than later. Yeah, they are pretty exciting. They're pretty exciting. They're going to be, oh boy, they're going to be one of these, so it looks like they might be writing covered calls up to 100% of the fund. That's a lot. That is a lot. So it'll be very interesting to see. Now, and this is kind of the way I look at it. If they say up to 100%, that doesn't necessarily mean that they're writing on 100% of that fund immediately, like every day. 100%, bang, bang, bang. That doesn't mean that. It means up to 100%, meaning depending on what the market's doing, they have the option to write up to 100%. So, for example, if the market's in a very bullish pattern, I don't think they would write 100%. I think they would pull back a little bit because you don't want to be losing the upside on the entire fund. So I don't think it'll be 100%. I think it'll be up to 100%. But if we are in a very volatile market, it's kind of flat, moving sideways up and down a little bit, they might go pretty high. They might go pretty high with some of these because those are prime times. Prime time for premiums. So that's kind of the way I would look at it. Paul says it's advice with double I's. Okay, there we go. There you go, Kelly. And yeah, there we are. Commercial. So it is paid. So $9.99 a month. Now maybe though, you know what? See if they have a free trial. It's hard to say. I noticed that a lot of software lately I've noticed is not having free trials. Like that, you used to always be able to get free trials. In fact, you used to always be able to go in, and if you only had one task to do, you could get the free trial, do your task, and then say, nah, it's not for me. But yeah. All right. Cowboy. With cats in the house, you should change filters monthly. Oh, maybe. Yeah, that wouldn't surprise me. Yeah, there's a lot of cat here, that's for sure. Bismarcky says, looking forward to some dividends this week. Yes. This is that time when there's going to be also another big time for dividends is, well, right around the middle of the month too is another really big time for dividends. But yeah, I love it. A long time ago, I don't know how long ago it was, I actually had this master list I had made for a video on when all the dividends drop for like a bunch of Canadian stocks and ETFs and stuff. I think I need to do it again. I think I need an updated one because we get a lot of new stuff coming out as well. Rory says all my new buys have been in the US S&P lately. Okay, fair enough. Nothing wrong with that. All right, and Kelly saying thank you, Paul. Yeah, thank you, Paul. I always thought that's what I'm saying. Like, guys, even if you ask a question and I don't know, there's like 50 people in here. There might be one person, maybe 5. Who knows? So never hurts to ask a question. Let's all dump out our whiskey bottles, Ford. Yeah, I actually have that. I have that story as well, Rory. You guys are hitting the stories before I even do them. That's great. I love it. Paul says not getting new points for comments. Really? What are the? Oh, let me take a look at the leaderboard right now. Give me a second here. Gonna refresh it over here and see if we can get our new top person. All right, top fans. So right now, I'm seeing Gursky at the top with 125 XP, followed by a big whole bunch of people tied for second. Cowboy, let's see, Jonathan, Rory, Kelly, and Paul, all tied with 75. But if there's a delay, it may have the time may already be broken. I don't know. Gursky says, I saw a video of Doug Ford dumping out a bottle of Crown Royal. Yes. Let me ask you a question. Did it look something like this? That's the picture for when we get to that story, by the way. But yeah, there's Doug Ford dumping out whiskey. Gotta love it. All right, put me back. Here we go. There we go. All right. Let's see here. Where am I? Right here. All right. Politicians says, Danger Bird, market's long overdue for a crash. And here's the thing. I agree, but I got a caveat to that, politicians. Everybody's been saying that now for more than a year. Overdue for a crash. Overdue for a big crash. And that's the problem. Nobody really knows when it's going to come. According to all the signs, it should have already happened, but it hasn't. And things just keep on going and keep on climbing and climbing and climbing. Yes, is there a big crash coming? Oh, you can bet your life on it. But when? When is it going to, when's it going to come? That we don't know. So it's going to be very, very interesting. Let's see. Crown Royal made in Gimli, Manitoba and bottled in Quebec. There we go. Yeah, Rory's just sort of confirming Gimli, Manitoba is the manufacturing site. There we go. All right. Paul says, can these up to 100% covered call ETFs actually use the premiums not needed for the distributions to actually buy more shares of the underlying? It's an interesting question. So yeah, because one of the things that you do have to realize, and this is true, and this will come out of, out of the premiums. It does come out of the premiums for sure. So when a strike price is hit with a covered call ETF, yeah, they have to rebuy because somebody who took out the contract has now bought those they bought them at whatever the price is, whatever the strike price is. That means that the price is higher than that. Yeah, they do have to replace them. So they're going to have to buy some more. Now, maybe they have that luxury where, the market retraces fairly soon afterwards and they can get it a little bit cheaper. Maybe they also buy some kind of keep a bit of a buffer. It's hard to say. I would have to actually, this is a question that I really would love to have an actual manager here with me so I could ask this question, because that's a really great question. But yeah, obviously though, yeah, all expenses. So when you're looking, when you look at a management fee, you get a management fee and you get a management expense ratio. So the management fee is just the general cost of running that ETF, just the general cost. Everything else is that management expense ratio, including the management fee is in there as well. So for example, when you have a ETF, for example, that has leverage and covered calls, you tend to get a higher MER. And that's because everything from, the interest on, because they're borrowing the money to buy more shares. So that interest, that's coming out of the premiums and out of the money that is made by that fund. So that all does come out. So, it would definitely be in there, and it would be reflective with the MER for sure. David says, I have no problem with 100 covered call. They are the traders, so I count on them to decide if they should sell 100 or 0%. Yeah, I like a sliding bar. And that's the thing. And I was listening to an interview. Was it on Adriano's channel? It might have been on Adriano's channel it was either on Adriano or Jordan's channel. They were talking to, I believe, it was one of the fund managers over at Evolve, and he was just mentioning that, with bank they have a certain level of covered calls, but after the pandemic, they saw this big movement, a big upside movement. And during that time, because of the loss of upside potential, they pulled back their covered calls quite a bit. And I was like, yeah, that's a smart move. That's a smart move. And I like that. It's one of the reasons that I like banks so much, is that they have made some pretty good moves that is keeping them in the green. And I definitely love that for sure. Cowboy says, Doug Ford is Canada's taco. Cut power never happened. All talk, no action. Yeah, well, Doug Ford, I think he had a lot of pressure on him over that whole power, because I think he was willing to do it, but I think I think he wasn't given much of a choice. He is a big talker. He's one of these people that he could, if he was unfettered, he could probably get us into some serious trouble. He probably could, but I still like him. I still like his approach overall. Jonathan says no free tiers and 10x more ads. Yeah, there we go. Let's see. Advice has a YouTube channel. Okay, and Paul says I tried Retirement Loop. It was $493 for a year. Found it wasn't for myself, having to enter my numbers into an Excel sheet. I requested a refund and got one. Yeah. And here's the thing, guys. I'm just going to throw something out there. AI. If you were to go to AI, like ChatGPT, and explain exactly what you want a spreadsheet to do, like explain exactly what the spreadsheet from Advice does. If you're able to describe it to ChatGPT, you might be able to get the code or just the data to drop straight into an Excel file, and it might save you some money. So it might be worth playing with. All right, a Bismarcky paid for that bottle. Yeah. Well, or maybe it was a gift. We don't know. Paul says bull markets can last 20 years. Will small pullbacks, and yeah, they can. I mean, bull markets will last longer. They traditionally will last a lot longer than a bear market. Bear markets are pretty short. And here's the thing. I mean, other than, I guess you could go back to the Depression and say that one was kind of long, but for the most part, bear markets are pretty darn short. Like, they can be under a year to maybe a year and a half. It's very rare to see a bear market go more than 2 years. So, yeah, that's the thing. I look at it this way. If we were to go into a bear market, it's a great time to just start buying a lot of stuff, dollar cost average, into a lot of different funds. So, and the nice thing is, for those of you on the income side, that volatility of going into a bear market is sometimes not that bad for covered calls. So, you could still be in a situation where, sure, you'll look at, your portfolio will be in the red, but you're still getting your income. And that's pretty cool, because on the other side, when everything recovers, that's going to start coming back up again. You'll get back to the green eventually. But if that income is still coming, and that's kind of your goal, then that's not a bad thing. And that's kind of the whole idea of like that income retirement portfolio, where you're not really worried about whether it's in the red. Who cares? Your goal is to basically to pull out income, and that's kind of that one advantage that an income retirement portfolio has over a dividend growth income portfolio. Because the problem is if you have a dividend growth income portfolio for retirement, well, if you're in a bear market and you need money, you're being forced to sell things at a loss. That's never a good thing. So that's one of the reasons that I really, really, really I don't want to say, I'll say endorse. Yeah, sure I do. I endorse that the income retirement portfolio because it makes a lot of sense and it's got a lot of versatility and it doesn't matter so much what the market is doing. Um, with covered calls, so, and I think I've mentioned this before, what controls how much of a premium you're going to get is volatility. So the more volatility in the market, a lot of times that can actually cause dividends to increase a little bit because it increases the volatility. That means if there's more volatility, you can charge higher premiums when you're selling your options contracts. So it's not a bad thing. All right. William says, a quick question. Do you have any thoughts on Mercado Libre? Looking at the numbers, it looks like 20% plus CAGR is possible from here, but is it too good to be true? I'm not familiar with this company, but let's take a gander here. Let me pull up the thing. All right, let's get away from that. All right, that's because I was looking at the leaderboard. I had to look somewhere. All right, Mercado, Mercado. There we go. Mercado Minerals. All right, let's see. Nope, it's Mercado Libre. Libre. All right. Am I spelling it right? Mercado. Yeah. All right. I'm thinking it might be a U.S. company, maybe. Let me just jump over to Yahoo Finance. Let's see what we can see if we can find anything here. I'm getting nothing. William, drop in a ticker for me, and we'll take a look at it. Drop in a ticker because I am not finding it with the name. All right, holy banana bread. Here we go. All right, let's get to Paul. People also ask, how long does a bull market last on average? The average bear market lasts 409 days and sees a market loss of 36%, but the average bull market lasts 1,866 days and sees the S&P rise 180%. Oh yeah, so yeah, that's one of the reasons. Like when I talk about dollar cost averaging, or if you just look at if you're holding things for the long term, you're going to, you always are profitable because, just because the difference between a bear and a bull. So with the bear market being so short and the bull markets being much longer, you do make a lot more money. And it's kind of that whole thing. So some people who are looking at, if you're a dividend growth investor and you look at a fund versus a covered call version of that fund, well, yeah, the regular version is going to make a lot more sense to you if you're looking for long-term gains because it's going to win. Now, during those segments, like in a bear market, the cover call version is going to win. Simple as that. So you got a couple of choices. One, if you move into a bear market, you could always move it. Well, the problem, and this is the problem, right? The problem is, I make it sound simple. Oh, just move from the regular fund to the cover call fund. Well, the problem is if you do that, you've probably already dropped. By the time you realize you're in a bear market, it's already probably too late to do that. So what would be the wiser thing to do would be to just hold on to that ETF. But while you're in that bear market, you could start adding to the covered call version. So when you're reinvesting, instead of putting it into, well, you have two options. You can put it into that one, or you could average down on the main one. You got two options really. The cover call one, at least, it's gonna go back up. But the problem is, once again, and this is kind of that whole thing, right? By the time you realize that a market has switched from bear to bull, or from bull to bear, it's usually too late. It's usually too late because it happens really fast. Well, it's not that it happens fast. It happens fast in the way that yesterday you kind of thought we were still in a bull market, but having a little bit of a rough bump, and tomorrow you're like, oh gosh, no, we are in a bear market. So you kind of have to be a little careful, I guess, that way. It really boils down to if you are that dividend growth investor, I don't know. I would almost just average down personally, I guess. You could, if you wanted to get in on the cover calls, yeah, you could do that. You could buy those, and you could always sell those later if you really wanted to. But at the same time, if you're averaging down, you're still going to make a lot of money in the recovery. The problem is the cover calls in that recovery, they've got that upside, the capped upside potential problem. So there is that to sort of weigh it all in. It's a fun math game. It's a fun math tank game, and sometimes there's a really thin line between making a profit and botching it a wee bit. All right. Let's see. Cowboy says Mercedo Libra is that Motley Fool's big promotion squack. Oh boy. Motley Fools. I'm a little worried now. I have very little faith in Motley Fools. I will say this. Usually some of their free stuff tends to be the better, their best stuff is free. And that's because they're trying to get you on the other side of the paywall. Once they got you there and they have your money, they feed you a lot of bad stuff. I would never ever recommend Motley Fools. I really wouldn't. All right, Gigi says, Kamikaze Cash actually just did a very good video on all those Yield Max ETFs. I wouldn't touch them myself. Yeah, fair enough. And I'm kind of in that boat. I'm leery. I've been leery of Yield Max. But at the same time, I will make, obviously that will flow into the video. If I'm leery, I'm not going to make a video and make it sound like sunshine and rainbows. I will absolutely voice my concerns while I'm doing it. All right. Paul says, some of those Adriano testimonial videos say during a bear market, they took their income and their usual reinvestment, bought more shares at a cheaper price. With growth investing, no cash, no new shares. Yeah, and that makes sense. If you're an income investor, right, and you've got extra money left over, and we're in a bear market, why wouldn't you buy some more? Because that, you're going to get, for one, you're getting a higher yield for those bucks, right? Because the prices are probably down. That makes a lot of sense. So yeah, for an income investor, 100%, you're going to be rebuying. You're going to be averaging. You'll be averaging down, but you're getting that bigger yield. It's all about the yield at that point. Bismarck, he says, I'm just going to keep reinvesting my dividends. Nice. We got Leon's Money Flow in here saying hello all. Why, hello, Leon. Of course, the first moment I saw Leon, I instantly was thinking of what is it? Is it Leon's Warehouse? Oh boy. Elisa's in the house with a hi, everyone. And Zamayer comes in. Hey, hope you're doing well. Would love your take on Miteka these days, especially lithium. So lithium. I used to be excited for lithium. Right now, I'm not super excited because I will tell you, there's a lot of technologies right now. A lot of battery technologies, especially some of the salt ones, that I think lithium is, I don't want to say dangerous. I don't want to say lithium is dangerous, but I think that once one of these other technology takes off, that demand for lithium could come down quite a bit. So I would say be careful with lithium. Like, I'm not saying don't invest in it. I'm just saying pay attention to what's going on with lithium in the news, with battery technology, because if one of these, and this is kind of the thing right now, some of these salt-based batteries, they don't have the length or the staying power, and they need to be really big. That's kind of the big kind of stumbling block. But if they get that down and they overcome the distance and how long they can hold a charge for, that could be, I don't want to say a death blow, but it could certainly be a serious wound to lithium. So lithium is one of these ones that I'm like, cautious with. Caution, I think, is the word of the day when it comes to lithium. Al Jones says the S&P is up 94% the last 5 years. The bears can have their 20% crash and everyone will be happy. Yeah, I mean, that's the thing. And I'll be happy to be able to buy things a little bit cheaper for sure. Let's see. Motley Fool often pushes Mercado Libre. Oh, yeah. I already know I'm not going to like it. I know I'm not going to like it. Oh. We got ourselves a super sticker in here. Paul in with the $1 super sticker. But you know what? That's enough to make Paul our first goat of the day. So we got ourselves a goat. Love it, love it, love it. All right. Thank you, Paul. All right. Now let's get back to these comments. You guys are just bringing them in. Just bringing them in. I love it. All right, let's see. It's South American eBay, according to the Fool. Oh, boy. Yeah. Oh, so the ticker for Mercado Libre is MELI. All right, now we got a ticker. Oh, gosh. Let's take a look at this. MELI. We'll start here and see. Okay, here it is. Oh, it's because it's all spelt in one word. That's why. It's a pretty expensive stock. So yeah, all right. So they're probably reacting to this little spike here. But look at this. All right, so 24.18. And I'm just taking a look here. So it is a growth stock. I'm not seeing any dividend associated with it. So yeah, the largest e-commerce marketplace in Latin America. All right, fair enough. That's cool. But let's go. I want to go behind the scenes here a little bit and see a few things here. Let's look here. They do have a fair amount of debt. So they've got a 157% debt to equity ratio. So they've got a lot of debt, definitely. Their return on equity, though, not bad, 43.83%. Now, this is very interesting. They apparently had a dividend, but whatever reason, it looks like they stopped it. Very interesting. Yeah, that is interesting. So I don't know what's going on with their dividend. I'll leave that alone. I'm not going to deep dive too deep into this company. Are they the next eBay? Maybe, but at the same time, you got to realize, I have a feeling that, they're competing against the likes of Amazon. Maybe this is a good company. It could be. It looks, there's nothing wrong with what I've seen. Everything, it looks pretty good. It could definitely use a a stock split, that's for sure. Nothing to excite me, but other than that, well, the return on equity, I like that. I like if it's over 20%, I'm excited. I'm excited with that. It's over 40%. So, is it a good company though? Is it going to absolutely explode? I don't know. Right now, they've got a fair amount of debt. They need to get that under control. Of course, now, with that being said, I don't know what that debt is. It could be good debt. They may have just done some major expansions that's going to really revolutionize what they're doing. Maybe, I don't know. So I would definitely say with this one, I don't think you'll lose money on it. I don't know if it's going to explode as much as the Motley Fool seems to think. But I don't think you'll lose money on it. I'll give you that. That's all I can give you with this quick little look. That's for sure. All right. Let's see here. Yeah, exactly. So yeah, it has the ticker, and that's the reason it didn't show up is that whatever reason, and I think it's the same thing with Yahoo as well. The Mercado Libre, all one word. There's no two words. That was kind of throwing them off a little bit. So yeah, it could be an interesting company. Is it going to explode though? I don't know. It's probably going to do okay. I think if you put some money in it, you'll probably make money. I just don't know if it's going to go as crazy as what Motley Fool makes it sound like. All right. Danielle says, do you really think we can keep cover call ETFs for many years? I have 12% of my investments in cover calls, and I sometimes wonder if these income are too good to be true. Um, Here's the thing. They're not giving away money. No company does that. Let's sort of look at that first. So when you look at these covered call companies, they are, they're giving you what they're making. So, they're making that from the premiums. They're making that from the funds that they're holding. So it's not a situation where they're not taking out loans so that they can pay out their dividends. They're not doing that. Covered call companies are not going to, those management companies are not going to do that. So they do have that money. Will it last forever? Probably not. Probably not. Not any one fund. There will be covered call companies that perhaps, do go out of business. But what you're more likely to see with a covered call company is that, if the underlying asset starts losing its volatility, well then yeah, you're going to see some of those dividends start to reduce because they need the volatility to make the premiums to have higher premiums. So I don't think there's a huge danger. I think what I would look at is, first of all, what is that ETF investing? And it's kind of like, even it's like regular stocks. So for example, I'll give you a good example here. If you are, let's look at the single share stocks. So if you look at the harvest stocks, you've got HHIS, and then you got a whole bunch of different ones for a whole bunch of different US companies. Well, you got the Canada ones too. So HHIS, because it's holding a whole bunch of them, if one of them struggles, it's not going to be a big issue because you got that extra diversification built in. However, if we had just one company, let's say Eli Lilly. I'm going to pick on Eli Lilly. So Eli Lilly makes a weight loss drug. That's one of their big, they do more than just that, but that's one of the things that they're doing. Now, if for whatever reason people no longer wanted to lose weight, if all of a sudden fat becomes in and everybody wants to be fat, that sounds ridiculous, but I'm using this just as an example. Well, what would that do to them? That could certainly hurt that company. And if you were holding that high income stock in just Eli Lilly, you could run into some issues. And let's just say the issues got really bad for Eli Lilly, and that one company decided, we can't hold on. Our debts keep getting bigger and bigger. We're going under. We're going under. Periscope up. We're diving. If that happens, if that were to happen, it's probably not. It really probably isn't. We're kind of going into a ridiculous area, but if they went under and you were holding that ETF, yeah. Now, it's not going to be a situation that ETF will keep going down, and eventually you'll have, you'll see it going down. So you'll probably will sell out because you'll have the news, hopefully. Well, if you're here on this channel, I'll be like, yep, this is you probably want to get out of that ETF. But for the most part, that's kind of the whole point of what I just said, is looking at a diversified field. So when you're concerned about covered call ETFs, there's a few things. One, is it a good company? Is it a reputable company? So for example, we've got some really good companies: Harvest, Hamilton. I was going to say Vanguard, but they don't really have covered call ETFs. But Global X, iShares. There's a lot of these companies. They are well managed. They're, you're not going to run into any issues with them. There's probably a couple of the more sketchy ones. I think was it Vic? I think Vic on Friday was saying something about Roundhill. Yeah, there are some companies that are more sketchy. So if you stick with the companies that are more well known, Evolve as well, I'd throw on that list. Purpose. There's a few more, but those are the ones that I think you'll be fine. I think you'll be fine. And keep in mind, you don't have to hold the same ETFs forever. I mean, if you see a better diversified one that feels safer for you, there's nothing saying you can't liquidate one and move it to another. Just kind of pay attention to how you do it, right? Meaning that you don't want to sell one while it's deep in the red in the middle of a bear market. Well, maybe or maybe not, because if the other one is deep in the red too, that you want to move to, it's usually not that bad of a problem. I call that a sideways, basically a sideways trade. So just something to keep in mind. But yeah, are they too good to be true? They're not really. They're not. Um, and this is kind of one of those things. And I have a skeptic. I have a big skeptic in me. I will point this out. And I have been watching them and watching them. I'm like, are they too good to be true? There's got to be, there's got to be a downside happening here. I mean, the downside is, yeah, there is a downside, but we're well aware of what the downside is, like that capped upside potential. That's a downside. So there are downsides, but if you're using it for the income, the capped upside potential, not that big of a problem. It really isn't. So I kind of look at it that way. All right. William says, the idea is that their secular tailwinds are entirely different for retail since they're still developing, still as economies, and they have a wide moat. So an Amazon infrastructure plus payments. Okay. See, and that does sound good, William. But keep in mind, I had not heard of this company until you brought it up here in the chat. So I don't have a lot of background information. So that's the thing. Like right now, looking at them from the front, yeah, they look solid. They have a little bit of debt, but that's fine. They have a pretty good return on equity. So they're definitely worth diving deeper into. So, I don't think you'd lose money on them. I don't think you would lose money on them at all. All right, Roy says, in my opinion, Danielle, that's why I think a hybrid version of investing is best. Yeah, and that's it's kind of an interesting thing. I've been thinking hard about this. Some of the comments I got when I did the hybrid video before is that, I got comments along the lines of, thank God somebody's finally done this. Everybody's income or growth. There's nobody in the middle. So I was kind of like, all right, yeah. I mean, and when I look at the 0 to 100K portfolio, it's kind of borderline hybrid. I've got a good amount of income in there. So it's an interesting thing. And I think that's probably, I think the channel has kind of sat in the middle for a long time because, I've got my dividend growth investors who are here. I have my income people. I think I got more income people than the dividend growth because I can just tell you right now, if I drop an income video, it will do 2 to 3 times better than if I drop a dividend growth video. That's just the way it is. That's just the way it is. And that's one of the reasons that, for those of you who are dividend growth and you're like, you do too much income stuff. Well, I try to do a representation. Like if 75% of my audience wants the income, I'm going to probably do that 75% of the time. And then 25% of the time I will throw things to the dividend growth folk. All right. Danielle says, let's see, I have some in TFSA, but I am maxed out for 2025. Almost maxed out my RRSP, so now I have some in my non-registered. You're at that point. Now that's the fun part. Sometimes people say, oh boy, this is a hassle now, but it's a good problem to have. So this is where you really want to start playing with your investments and sort of look at everything you have and make sure things are in the right place. So for example, if you've got, if you have anything that really is not really producing a lot of income, it's more of a growth situation, that's a perfect stock for your outside. Well, it's also perfect for your RRSP. It's good for either your RRSP or your non-registered. I always like to put the ones that are performing really well with dividends, I like those in the TFSA for the simple reason that it's all tax-free income. It doesn't matter what's going on. But the other thing is, and this is kind of that interesting thing, people get on return of capital quite big. And one of the advantages, though, that return of capital does have is if you're more of an income investor and you have filled up your TFSA, you got nowhere else to put it, then a dividend that does employ a lot of return of capital, that's not that bad because, what's happening is a lot of the money they're giving you is your own capital. So that means that it's not taxed. Now, what it does do, though, is you still always pay the taxes. The taxes will always get you in the end. It lowers the adjusted cost base on that ETF. So if you do sell it at a profit, you're probably going to pay more capital gains than what you would have if it didn't have return of capital. But that's what's nice. Then you can sort of control when to sell it if it's in your non-registered. So for example, if you did have to sell it or you wanted to sell it and it was going to create a huge capital gain situation, well, that's where you can employ something like tax loss harvesting to get around that. There's all kinds of different ways and things you can do, but you will always pay the taxes in the end. In the end, the tax man always gets you, but you can certainly keep them tied up for a long time, that's for sure. Let's see. Paul says, there we go. Paul says, Danielle, keep to 10 to 15% yield to avoid NAV erosion. And, oh, here we go. CC says, did you see the recent controversy surrounding the MSTR dilution? No, I did not. Oh boy. And I know there has been dilution with strategies because, it's kind of one of those whole things that they've been, they'll print shares, sell them, and use that money to buy more Bitcoin. So it does happen over there, but I haven't seen a controversy on it. So now I'm interested. I'll have to check that out. William says, I didn't find it through Motley Fool. I saw a distraction in a private Discord. Oh, okay, perfect. I like it more. I now like it more. Well, I still have the exact same opinion on it, but if Motley Fool is out of the picture, then all right, then their claims might have a little bit more meat on the bone. So yeah, it's still, like I said, I like what I saw. I love the ROE. That's a little high, but if that's good debt, it's not always a bad problem. So yeah, I think it would be worth a deeper look for sure. I still don't know if they're going to explode as much as I guess the forum on the private Discord said, but it'll be interesting. It'll be interesting to see. It'll be interesting to watch and see how they do grow. Probably, if you're interested in it, William, it probably isn't a bad company to buy a little bit and sit back and see what happens. All right. Rory says Motley Fool loves to unload dog poop once you're in. Oh, God, do they ever. Let's see. YieldMax have the only inverse income ETFs, unfortunately. Oh, okay. Are they the only inverse ETFs in the U.S.? I'm surprised. Like, I know in Canada here we got a whole bunch with the Beta Pro. So, but yeah. Then if that's the case and you are... And now if you're playing inverse income ETFs, then you're obviously trading. So, yeah, if that's your only option, then that's your only option. But keep in mind, those should be smaller moves, right? All right. Let's see here. Paul says the Bitcoin per share has continued to increase over time for strategy. They are also issuing new shares on STR, F, and K, and C to buy Bitcoin. Okay, fair enough. Kelly says some company got my cell number somehow and gets hung up on 4 times a week. I suspect Motley Fool. Interest clicking started it. Oh, yeah, that wouldn't surprise me. I'm at the point now that unless I know a number that phones my phone, I don't answer. I have a voicemail. So people can go to that. And honestly, I would rather people not call me at all, to be honest. I'd rather, reach out to me on email, direct message me. Anything but call me. Really, who does that anymore? Nobody calls anybody on the phone anymore. Like, other than your mom, maybe your mom, depending on how, if your mom's older, then maybe. And the funny thing is, even my mom, if my mom calls me on the phone, I usually answer the phone saying, okay, who passed this time? because that's usually the only time she'll actually call me directly, because because someone in the family moved on. Let's see, lithium salt or solid state batteries are still lithium. There's actually some stuff. There's actually technology that China's been working on. It's using it's using salt, NaCl, opposed to lithium. So it is a little bit different. But is there lithium in it? I think there's a little bit, but I think I don't think there's a lot. Let's see here. Strategy needs a STRU. Then you can spell a swear word. Oh boy. Dougie Ford should wear red. All right. Poor Doug Ford. Kubo says, do you do any swing trades? And what percentage of the portfolio do you swing, if so? All right. So yes, I do swing trades. I have, right now, currently, I've actually got 2 swing trades on the go. I'll probably have some more going this week. So I do that in I've got a couple of portfolios. So I have one for the channel. So the 0 to 100K challenge, that has its own portfolio. And that's actually hooked up over on Blossom. So people can go and take a look at that. Now, I also have a swing trading portfolio. Now, that one, like I said, there's a couple of swing trades on. Now, I do share that information with the channel members. So the channel members are aware of what trades are going on, because I will definitely let them know for sure. But, yeah, what percentage of, like, if I look at the entire portfolio, I would say, yeah, my swing trading portfolio is probably somewhere between 50, 60, might even be up to 70%. It's it's a sizable swing trade, but I mean, that portfolio, that makes the money that I live off of. So it's important. YouTube doesn't pay me very much. Now eventually I'm hoping to make more on YouTube so that I don't have to trade as much. I mean, I'll still trade, but be more or less just for the channel, opposed to putting food on the table type thing. Gursky says, how many stocks ETF is a normal range for a portfolio? That's kind of an interesting question, because it really comes down to the trader, or the investor. So if you have very little time, that number obviously will be smaller, because you'll want something to manage. Now, when it comes to individual stocks, you're going to need more if you want to be able to have a diversified portfolio, opposed to if you're using ETFs. Like, you could have a very good diversified portfolio using ETFs with 4 or 5 ETFs pretty easily. Heck, there's people out there that they basically just go all in on something like XEQT, and that's all they invest in. And they're like, yep, this one has all that diversification. I'm happy with it. So, there's many different ways that you could certainly do it. So, for example, the portfolio that is coming up in Tuesday's video, it's got 10 ETFs in it. So, it's a 10 ETF portfolio. All right. Mr. B says, what's going on with Lululemon? Is there an opportunity to buy? Oh, that's a good question. I thought I heard something about Lululemon the other day, but here's where we go to my backup. If I don't know what the current news is on a company, I will usually just come over here and let's just bring up. We need Lululemon, so LULU. Here we go. All right, let's bring up Lululemon. Let's drop on down here. And this is going to give us a couple of things. So, well, this is interesting. So they just had an earnings call. Right away I noticed this. So what's going on with their earnings? Now, okay, they did beat on earnings by 6.40%, but they lost on their revenue by 0.31%. Okay, interesting. Now that's a big drop when those earnings weren't that bad. But keep in mind, those are just the pieces of the data. We don't know what was in that earnings call. Now, this here makes it sound like there is a little bit of news in here. So let's see. Lululemon share price has plenty of room left to fall. Um, let's see if this gives us any kind of information here. All right. Let's see. Let's see. Yeah, the Q2 release triggered a massive sell-off with the stock on track to hit long-term lows and arguably ultra deep value levels. Duh. All right, but why? Why? What's going on here? Okay, let's see here. Sell side forces are aligned against it. Data tracked, the consensus. Yeah, it's not telling me exactly what's going on. And I don't know what's going on with Lululemon in there. But this just gives me an idea that right now there is significant headwinds to the downside. So it sounds like Lululemon probably has more room to fall. So I would be a little careful. Or if you're looking to buy in, I would perhaps wait a little bit before doing that. All right. Let's go big. Let's go big for a moment or so. As we slowly get caught up. A guy says, "Hi folks, Candace. What do you think of TFII? It's been down since April due to tariffs. It's at a bargain now. The upside potential is huge. I bought into them. What do you think?" So TFII. I believe they're a trucking network. So let me just pull them up here. Let's head back on over here. TFII, here we go. So TFII International. So yeah, they do a lot of trucking here. So let's see here. Package courier, less than truckload and logistics. Yeah, right now tariffs are definitely hurting them. And the tariff situation can get a lot worse. Let me tell you how. We have coming up in July, next July of 2026, that's when the free trade deal comes up for renewal. And I have a feeling that's not going to be good. I don't think that's going to be good unless they can come to some kind of agreement before then. So right now, yes, it is hurting them. They may be suffering for a little bit. They'll be fine on the other side, though. This is a really good company. And I don't know what their debt is. Let's take a look. Let's just take a look at the back end here. But I know I like TFI. Yeah, their debt's a little on the high side right now, 113%. But once again, I'm not sure if they've been doing any kind of expansion. Probably not at this point. Because, yeah, it's this is not the time to be doing any kind of expansion, especially in that type of industry. Now, they have a return on equity of 86.30%. It's high. Now, could that be skewed by their debt to equity ratio? It might have a little bit of a movement, but I think for the most part, it is still pretty good. I think this is a solid company. I think they're going to be fine. I think on the other side, I think they'll be absolutely fine. Oh, so good. William says, by the way, I didn't mean to write a lot about one company. I only clarified when you first read my question. Just takes a long time for you to go through so many comments, so no intention to No. It's okay. It's okay. And besides, we got a leaderboard. And let's just see here. I'm going to see who's leading right now. Or I'm going to try to. All right. Oh, good. Let's see here. It's refreshing. So, does Gursky still hold the top? All right. Now I need to click on top of fans. Yeah, Gursky's still up at top. 150 experience point. Followed by Paul at 120. And then we got Cowboy and Rory tied for third with 100 XP each. So, that's fantastic. I don't mind. All right. Jersky says, I thought this was the year I'd get my portfolio under control. Oh, boy. Yeah. Yeah, I can understand that. This is a year, though, that quite honestly, if you're doing nothing in your portfolio and just letting things grow, you're probably doing okay. Paul says, are the cover call ETFs in Canada using preset computer programs to do the options or physical humans doing the work? My understanding is that physical humans are doing it, but with AI getting with AI getting so good, I wonder if it's physical humans using AI to do the work. I don't have any real information though, Paul. I just know that a lot of times they'll talk about how many years of experience some of their management team have who are doing the funds. So, but yeah, I expect AI to get involved. It would make sense. It would make a lot of sense because AI is, well, it's absolutely exceeding at everything. Um, David says, oddly enough, the low for SPX was 666 in March of 2009. So I'm going to call a top at 6666. So that's 185 points from here. That's awesome. I don't know why that amuses me so much, David, but why not? Paul says, funny watching your ads for new ETFs at the top. Oh, is there ads on the top for new ETFs? That's hilarious. What would be really funny, and maybe this is something the AI at YouTube should do, is if I'm talking about an ETF, could you imagine if they put an ad for that ETF up at top and cut me in for part of it, right? You know, like if I'm talking about a Biggie, the new Evolve one that's coming out, and they put an ad up there, and you guys click and go and buy Biggie, I want a cut. I want a cut. Danielle says, I don't really understand NAV erosion. All right. NAV erosion. It's a hilarious. So NAV erosion, it stands for net asset value. So that's how much an ETF has. Now, I will... Okay, it's time. You have evoked the whiteboard, Danielle. You have evoked it. All right, let me a second here. Where the heck? There it is. I need to find Canva. Oh, no, we need to bring you guys up here. Come on, Canva. All right, I'm just going to type it in again. For some reason, Canva is just white. All right. I know I'm looking for the whiteboard, not a white Canva. Here we go. Canva whiteboard. All right, so net asset value. So if you have a stock, and let's say that stock, let's say, whoops, give me a marker. All right. I don't want a line. I just want a marker tool. All right. So if you had a company, we're going to do this very simplistic because I don't want to deal with big numbers. So let's say you have 10 shares, and each share is $5. So it's a small company. It's like a lemonade stand or something. I don't know. But 10 shares at $5. So that means that that company, or in this case, if it were an ETF of one company, we'll just say it doesn't matter. That company would be worth, they would have a market cap of $50. 10 times 5, 50. That's what they're worth. Same idea if it was an ETF. So if the ETF held that, and let's say that was the only thing they held, then they would have net asset value of $50. But, all right, let's take this another step further. So this company, they pay out dividends. So they pay a dividend of, we're going to say $1. Holy banana bread. Why would they pay that much if they're such a small company? But that they're paying out $1. All right, fine. So there's 10. So when ex-dividend day comes, they're going to pay out 10 times 1. So they basically are paying out, in total, they're paying out $10. Well, they were a $50 company. So they lose the $10. That gets subtracted from their value. So on ex-dividend day, they're now a $40 company because they just paid $10 out to everybody. Now, obviously, in the real world, they're still making money and that value is going up. So a lot of times that 50 or that $10, or that $50 company, they might be worth $60 by the time they get to ex-dividend day. Holy cow, I got a frog here. Now there we go. So they might be worth more. So normally they're going up, but part of that money gets subtracted. Now, when we're talking about NAV erosion, all right, I'll just put NAV ER. New drama from Fox, Navier. No, all right. So when we're talking about NAV erosion, so if, for example, you have an ETF that's worth, we'll say it's worth $40. All right. Now that $40, if they're paying out a dividend of, let's just say $1. I'm just using one. We're just using one. Like it's bigger than this, but it boils down to this. If you're getting $1 dividend each month, we'll just say every month. Well, when they give you that dividend, they're now worth $39. So it's like, okay, value has disappeared. Value has eroded. So that is a form of NAV erosion. But here's the thing. It happens to all stocks. It happens to everything. So it's not really. But the problem is when you have a ETF with like a high covered call ETF, they're giving you bigger dividends. So it looks bigger. It looks a lot more scary. Now keep in mind, before the next dividend, they've got premiums coming in. You know, they also have any changes under the underlying asset. I better put the ET there, otherwise people will have fun with that word. But you got premiums coming in. The asset, if it's growing, it's coming in. So by the next time we get to you know, ideally by the next month we have a $40 value again, and then they give away that dollar, and then it's $39. So you will notice with all of these funds, all of these really high dividends, if you just look at them at the opening on next dividend day, you'll notice a big drop from the close the day before. And that happens over and over again. So that is one of these things that we call NAV erosion. Now, the other thing that sometimes gets lumped into NAV erosion is all has to do with that upside potential. So when, for example, let's see, POT, upside pot. All right, I'll put the period there so we know it's not pot. When cover calls are happening, we've talked about strike prices. We've done this many times where, you know, if people are actually if they're hitting the strike prices and they have to sell, they lose a little bit of that upside potential. And that's fine. That happens. But what does that do? Well, that means when you're in a recovery mode, so when the stock is moving like this, if the underlying assets go from, let's say, from 40 to 50, so if the average underlying assets going from 40 to 50, well, that covered call might only go from 40 to 45, we'll say, because of that loss. So you got that big difference. You got that kind of gap. It's like, well, what happened to that $5 in there? Well, it eroded. It eroded. It's NAV erosion. So yeah, it's still not erosion. We know exactly what happened to it. I mean, you know, you got dividends in there too. So so the dividends are taking away some of this because that's the cost of doing the premiums. It's the cost of making that extra money to give out as cash. So that's kind of the NAV erosion, just ways that the share price gets lower, and you see it more pronounced in covered calls. The higher the yield, the higher the erosion. But is it really erosion? I know when I actually, at the very beginning of that live stream with me and Adriano, I threw that at him, and he doesn't even believe in it at all. He thinks it's kind of like a boogeyman of covered calls. So yeah, is it there? Yes, but it's not that mysterious. It's just normal parts of math. It's kind of one of those things that come in. And when you're going into covered calls, if you kind of understand how they work and you understand, the way things move with them, then yeah. The other thing too is, inside of all of this, is if you are in there for the income, then honestly, That's the important part. And a lot of times when you have stocks that are moving kind of like this to the downside, but they're choppy all over the place, a lot of times that's really helping produce that income. So yeah, their share price going down, sure. Is it a bad thing? If you were going to sell it, it wouldn't be great, but that's not your goal. If you're an income investor, as long as it's a well-managed fund, by some, by any of those companies I mentioned earlier, you don't have to worry so much. You don't have to worry that, it's going to go to zero, because it's not. The market's going to turn around. And when the market turnarounds, it's going to come up. It may not come up as high as the underlying asset. Now, mind you, there are a couple of exceptions here. Sometimes they do as well. HDIV, for example, it's a covered call, Canadian one, and it's doing really well. It's doing really well. It's you're getting a half decent total return. You are beating the market, and that's not too shabby. So it's just, anyway. Hopefully that shed a little bit of light on NAV erosion. I really should do a video on. There's a lot of things I really should be making a video on for sure. All right, let's get back to the big screen for a moment. Paul says, strategy dilution is a feature and not a bug. You sell $1 for $1.50 currently to buy Bitcoin. Yeah, and that's the thing. It is built right into it. I don't know what the controversy part is, but I know that dilution is a normal part. Will says, your opinion on the percentage of fixed income investments in GICs heading into retirement. All right, so fixed income is kind of this really interesting thing for me. Right now, even right now in the 0 to 100K, I've got a good amount of fixed income, but it's only because I've been putting aside some cash, expecting the market to do a turn, but it just doesn't seem to want to. In fact, last month I didn't put any more into the fixed income because it's sitting at about 14%. So I'm kind of happy with that level for now. But what type of level should you have? So normally what fixed income does is it kind of gives you that stability when you go into, a bad market. So into a bear market, for example. For me, it really boils down to what type of retirement portfolio you have. So if you have if you have an income portfolio, so let's say your goal is to pump income out of your TFSA tax-free, and you're using that to supplement your OAS, your GIS, your CPP, all of that. You're using it as a supplementary income that's not clawing back any of your other supports. Well, how much fixed income do you really want? Do you want to take space away from the income that's coming out? Because in a bear market, if you have, like I said, if they are half decent managed companies, so if it's, some of the more popular companies in Canada, you're going to be fine going into that. Yes, the prices, the value is going to come down, but the income is going to keep coming out, and they will, of course, rebound on the other side. So you have to kind of look at it this way. If that is that situation, you probably don't need as much. Now, if you don't have an income portfolio, and let's say you're just running a total return dividend growth portfolio, and you're happy with that because you've got enough, you got enough pensions. Maybe your job gave you a very generous pension, but you've got enough assets that you don't need that money. In a case like that, it's kind of fun. I would say no more than 10%, probably somewhere between 5 and 10 wouldn't be a bad area for fixed income. And there's lots of ways you can do that too, though. For example, you can use, of course, you can use GICs. You could also invest in bonds, things like that. There's a lot of things you can invest in. GICs are pretty safe, for sure, but you're not going to get a big return on them. That's the only downside, is a GIC right now. I think the best you're going to be able to do, with rates coming down, oh boy, I think the last time the chat looked at the GICs for me, it was like maybe 4%. But yeah, it's fun. It's fun. Rory says the school of Adriano goes through all the nav issues. Yeah, Adriano gets hit with that a lot. Definitely a lot for sure. All right. I'll let my landline go because of telemarketers. Yes. Actually, I was thinking the other day. One of my proudest moments for my mom. Now, my mom is, how old is she? She's either 74, 75, or 76. She's one of those ages. I don't know which one, but she's one of them. Um, One of my proudest moments is when she finally let go of her landline. It took me months and months to convince her that all she needed to do, because her big argument was that everybody knows my phone number. I've had it for like 30, 40 years. And my argument was, you can port it to your cell phone. Why are you paying two phone bills? So finally, during the pandemic, I finally got through to her, and she switched. And so she ported it over. Everything is fine now. She's just got the one phone. But yeah, anyway, landline. It made me think of it for some reason, Cowboy. William says, thanks for the stream, Candace. Gotta go. 2300 in IKEA land. I saw your message on the Discord server. I may disappoint in the Swedish equities department. Oh, and I concur. Yeah, the Motley Fool. I'm not going to say that word, though. I'm not going to say it. You guys can read it, but I'm not going to say it. Zamayer says, does Beta Pro pay distributions? No. They're just inverse ETFs. So they're not even designed for holding, for you to hold more than a day, because they reset the leverage on them every day. So if you try to hold one long term, you can get some funky results in there because of the resetting of the leverage. So they're pretty much day trader tools. Pretty much for day traders, you come in, you buy it, you ride it up for half a day maybe, or maybe you ride it up for 10 minutes, and then you get out. It's as simple as that. Paul says, in the last 3 months, I am beating SPY and QQQ by about 3%, but behind ARK-K by 10%. Got a subscription to Snowball Analytics. ARK-K invests in a lot of the same stocks as I do. Okay, interesting. Yep. Let's see. Oh, William. I thought you left, William. William says, oh, didn't know you trade so much. Got to ask, since you're more experienced, how well do you do cager-wise in trading versus your investing? Good question. I honestly don't know. Pretty much with, because it really depends on the swings. Like right now, one of the swings I have going on is Air Canada, and that's the one that I've made public. So I bought it at basically. Well, I had a limit buy order for $19. So I'm in at $19, and right now I think it's sitting at $19.20 something. But I'm going to hold on to it probably till it gets to about 22, and then I'll cash that in. So yeah, I do make more. I guess total return wise, I would say it's higher, but I couldn't tell you by how much. Paul says, if Snowball Analytics added a social part, Blossom would be in trouble. Currently, Blossom has too many bugs in the investment side. Yeah, but Blossom is always fixing them. Blossom is always working on getting them all fixed up. Paul says, isn't other companies copying Lululemon clothing with cheaper items? Probably, for sure. I have no doubt about that. Kubo, do you have leaps in your trading port or just buy shares straight up? So yeah, on my trading portfolio, I will usually, it depends. Like with Air Canada, I bought straight up Air Canada stock. Simple as that. Sometimes if it's a more expensive US stock and I want to do a longer swing on it, I'll usually jump onto the CDR actually. And the reason I do that is because, well, it's cheaper and I can get a bigger movement on it overall. So yeah. But mostly it's straight up stocks, or sometimes an ETF. I might play an ETF from time to time as well, depending on well, who's down and who's in an opportunity situation for me, or more importantly, who's entered a channel. Zamayer, are there any inverse income funds in Canada as an alternative to YM? Would love to hear about any that pay a decent distribution. I don't think they have an alternative to. I'm not sure. I would just check it out. If you do a Google search on Beta Pro, and it's owned by Global X. Global X Beta Pro, you can pull it up and you can look at all of the different funds, but they have most of the big markets, Canada and the US, and a lot of commodities, so oil, natural gas, a whole bunch of different things like that. All right, and oh my gosh, look at this. We got ourselves a second super sticker from the Paul. So Paul is still the GOAT. Definitely still the GOAT. What can I say? Thank you, Paul. Thank you, thank you, thank you. All right, I am so far behind. Paul says, used up my Google Play balance from Google Opinion surveys. Received a total 478 from Google Opinion over the years. Nice. Nice. You gotta love it. I love it when people pay for my opinion. That's for sure. Jonathan, AI gets into everything. It really does. It really is. Well, I'll tell you, one of the things I will use AI for is when I'm scripting. I will write a paragraph and I'll read it over and I'm like, oh my gosh, that is really clunky. So I will occasionally take a paragraph I've written and I'll say, hey, can you polish this up? And then drop it into ChatGPT and she'll spit back. She'll spit back a nicer, little bit of a nicer version of that paragraph. And I'll be like, oh, okay, that does work. But then I usually change it a bit more as well. But it's a process. It is a process. Rory says, Candace, with a bigger portfolio, you can finally add to your Star Wars empire. Looking at the AT-AT Walker in the back. Yeah, there's a lot of Star Wars Lego here. There's a lot of it. That's just, you know, I needed something to put there because, you know, I removed, like, I had Blaze, a picture, like a cat, my old cat, Blaze. I had her photo sitting there. My mom had given me the picture for, like, my birthday one year. And it was just sitting there. And then Jill was like, you know, it kind of looks like a shrine. And I'm like, oh, not exactly what I was going for. So I just removed one cat for a stuffed cat. But Blaze is still here. She's just on a different shelf. Actually, she's sitting next to a whole bunch of Lego figures. So it's fun. But yeah, the empire's growing for sure. David says the next major pullback will test 3,500 to the COVID lows. So there will be some deals in a range of 40 to 60%. Wow, that would be interesting. That would be interesting. And the market is parabolic. The market is definitely high. I'm feeling that. I'm feeling that for sure. Cowboy, AI is frustrating. Keeps jumping on my phone. Google Assistant, Gemini. Yeah. Well, the funny thing is with ChatGPT is sometimes I'll ask ChatGPT to do something for me. And she sort of, whatever, decides that it wants it one way or wants to do some extra thing for me. And I'll be like, no, I'm fine. And then she'll keep asking me over and over again, can I just do this for you? Can I please make this? And finally, I just give in and I'm like, okay, just to humor her. Sure, go ahead, just do that. It's kind of interesting. AI gets that way. I mean, for a system that doesn't have emotions, sometimes it seems like it can pout. It can pout, for sure. Rory says, I like to see AI eat all of my chicken sandwich. There we go. Eat up, AI. Eat up. Paul says, you own growth stocks and sell some for income. You will have NAV erosion too. Absolutely. Absolutely. It happens. Like I said, it happens with everything. It's just more pronounced. In the covered call funds, for sure. Put up a chart of SPX from 1994, 3-month candles, and tell me if it's sustainable. I have one, but can't upload it. Oh boy. Oh gosh, I don't know if I have anything like that. Let me find out. Give me a second here. Let's, SPX. See how far back this goes. All right. Now something tells me. Now, are we talking about Africa Gold? Let me just I'll pull up Africa Gold. But I could be completely wrong here. I'm going to go to 20 years. Oh, well, there's this. Yeah, there's a couple of spikes, but this only goes back as far as 2006. What about Yahoo? Let's see here. SPX. I may not have the ability to go that far back. I may not, but well, I got one more try after at Yahoo. SPX. Come on. Well, how did that happen? All right. Oh, it's because I typed it. I typed it in the wrong box. CC. I typed it in the wrong box. Okay, SPX. Let's go here. SPX. I'll just put a TO there. No, it's not going to do it. I think it might. Is it on Neo? Yeah, it's having problems. It's having problems with it. Holy cow! All right, we'll go. We'll go one more spot. One more spot. This here, SPX. All right. Showing me the S&P 500. Let's see here. SPX. Looking for Canada. Looking for Canada. You see, that's the thing. SPX. Unless you are talking about the the S&P 500. Yeah. All right. Let me know if you're talking about the S&P 500. I might be able to pull that up, but I think I'm barking up the wrong tree with the Africa gold stock. I'm pretty sure I'm barking up the wrong. You know what? It's got to be. You got to be talking about the S&P 500. All right. Let's give me a second here. Let's just go. Here's SPX. Yeah, we're gonna go to this one here. I'm gonna go all time. Let's see what we got here. Oh boy, that's I'm gonna have to start doing some shrinking here. All right, see what we can see. All right, let's see here. April, May. All right. 66. Holy cow, what am I looking? I don't even know what I'm looking at. All right, let's go to. I am going to go. I'm on the 1 month. Let's go on. I'm going to go on the 1 year. I'm going to go on the 1 year. Holy cow. This is probably something I shouldn't have gotten into. I probably shouldn't have touched it. Let's see, January 85. Where are we going here? 94. January 11. All right. No, I want to go to, all right, 98, 97, 96, 95. All right, there's 94 right here. All right, we're at 94 now. Let's switch back to daily. All right. All right, let's see here. Am I still in 94? Dear God, no, it put me all the way back. All right, I'm not going to be able to find this. I can't wait. I can't wait forever, David. Yeah, I don't know. I don't know. Unfortunately. Yeah, and now I've completely messed this all up. I'll have to fix that later. CC says, I'm spending my weekend studying the stock market during the Jimmy Carter era because it's our best modern example of stagflation, even though our markets have learned since then. Yeah. Yeah, and that's one of the worries right now in the States. I've been hearing the word stagflation coming up more times than I'd like to hear it. That's for sure. Cowboy, thinking of doing a profit grab this month. Sell the profit in exact cash value. Buy something like HDIV or C-Day. Any thoughts? Well, I mean, I don't know how you're doing the profit grab, but I mean, if you got something that you can pull a lot of profit off of, it's not a bad thing. It's not a bad thing at all. And HDIV, I think HDIV is going to be fine. Like, I think the markets are actually going to be fine for probably this year, but I'm going to get very leery going into the new year. I I really think. And I do like, I mean, I like HDIV, I like C-Day. And keep in mind, one of the big things that is really helping the Canadian market too is gold. Gold has been absolutely dominating, and as long as that uncertainty remains, people are going to continue buying gold, and that might prop us up. Even when we start to do bad, it might still prop us up a bit longer. Let's see. I was thinking of doing an HDIV trade myself. Okay. Gursky says, MSTE has come down a lot in the last month. It might be a good time to get some shares. All right. I can't believe how far behind I am. Paul says, since 7/21/2021, HDIV has beaten VSP, the S&P 500, with and without dividends reinvested. Now, if you take the distributions as all income, your balance will still be higher than when you started. Nice. Yeah, no, HDIV has been, it's been on an amazing run. So I love it. I love that stock. That ETF. Rory says, my coworker lost his phone in the dumpster at work. Oh no. Loras came and picked it up. He needed another one. Oh no. Oh gosh. Roku from Stittsville in the house. When you grow up with and never had not a home landline, it's hard to get one. Yeah, I mean, how is the Nvidia swing trade? That's already come and gone. So with the Nvidia swing trade, so I had gotten in for the last earnings call. Things didn't go well, unfortunately, but in the morning at the open, it went up. And then it started to fall really fast. I got out because I was in the green. I had a half decent little profit. And I was like, I'm taking it. And then it went down. All right. Kubo says, entered a channel. Whoa, didn't know you do TA as well. Very nice. Yes, I do use a little bit of that technical analysis for sure. Gursky. Gursky is in with a super sticker, and that means we got a third. This is our third goat of the day. So we got a little video here for Gursky. Thank you very much, Gursky. Always appreciated. Always appreciated. All right, now I was too behind. All right, nope, we're here. Kat comes in and says, well, simple. Just had a data breach involving a third-party app. I would be very hesitant to link my brokerage account with any third-party apps like Snowball Analytics, Passive. Okay, fair enough. And one of the things I always say to people too, like with Blossom, so Blossom, you can hook it up to, it's only read-only access. And that's the thing. It's read-only access that Blossom has, but you can just manually enter your trades in there if that's what you want to do. Like if you're concerned, and there's good reason to be concerned because, it does happen a lot. Then, I think that's a good alternative. Like for example, with the 0 to 100K right now, I manually put it in, and it's not that big of a deal. It really isn't that hard. All right, Luke says, I sold some put options for TFI, made a very nice premium, even though my strike price is well below the current price. Okay. Interesting. Hi, did you see what happened to Lululemon? I am doing DCA. Yeah, we saw that drop. We were actually looking. Well, hell, I think we still have it right here. Uh-oh. Oh, no, it's, I was thinking I really messed it up. No, there we go. It is really messed up. Everything's messed up. Yeah, here it is. When I was trying to find the obscure date range, it kind of messed things up a little bit. But yeah, you can sort of see it here. Let me just, oh yeah, we're also on the on the day view. I'll move back to the 1 hour. Here we go. All right, let's see. Here we go. We're fixing it up. We're fixing it up right now. Might pull, oops, probably need to collapse that down a little bit. Yeah, here we are. Here we are. Yeah, definitely very dramatic. And the interesting thing too is you'll notice, like a lot of times when this happens with a company, where things are still going good, but it's usually just because people are overreacting to an earnings call, you'll normally see that they will start to creep back up. So a good example of that is Metro, actually, but I don't have them here anymore. Let me pull up Metro. MRU, because I did a trade. I did a swing trade on Metro not that long ago. Here we go. Metro, here we go. So yeah, here was, let's see here. Here it is right here. All right, I still need to fix this up a little bit. There we go. So yeah, Metro had their earnings. They had a bad earnings call, and this is what to me shows the signs of a company that is doing a little better and their fundamentals are good. And they dropped, and I bought down in here for my swing trade, and I knew that this is what was going to happen afterwards because they have good solid fundamentals. They're, it wasn't a bad situation at all. So that's what happened. They made their way back up, and I sold. I can't remember exactly where. Somewhere's up in here. So not a bad move. And now they're kind of moving down. They're kind of mirroring right now. They're moving averages a little bit, but they're probably ripe for, to be honest, they're probably ripe for another one. Other than the fact that when I'm doing one that's this expensive, it's like it's a lot of money to tie in if I want to do 1,000 shares. So I don't know if I want to do them again. And I don't think I'm going to. I don't think I'm going to right now because I think it's going to be more of a slow movement, but we'll see. I'd have to chart it. I want to chart it a bit. Rory says, I wish I knew about trading investing in 1994 instead of trading time for money. I hear you. Cowboy, I got the same type of plan. Jack is in the house. I'm trying to get this to scroll here. All right, let's see here. All right, where are you at, Jack? Trying to find Jack. Here we go. Here we go. Right here. Bang. I finally trimmed 1/7 of my 37.3% Google position on Friday, plus 40% in 4 months. So that's not too shabby. That's pretty good. I like that. That's good. I like it. Lululemon is in the downward dog these days. Yep, they've turned into a yoga company, right? A downward dog. Brokerage linking risk would now include journal linking. Interesting. That's, yeah, I'm not sure, but that's interesting. Are the news stories over? No, they're not. We've got through one so far. All right, you know what? I'm going to do number 2 right now. Let's get to number 2. Holy banana bread. All right. So, and I told you guys about this, about a leaked government document. So there was a leaked government list that shows 32 potential infrastructure projects under this new, the new Building Canada Act. So it's including, and these are some of the things that are on here. One of the big ones is a controversial new oil pipeline. Now it's not west-east. It's actually linking Alberta crude to the Pacific coast. So this pipeline would be, it would absolutely be a major win for Alberta's oil industry if they could get it. It would give Canadian producers access to the Asian markets. We've already got an LNG one. So this would be really, really, really nice. Now, Alberta Premier Danielle Smith, she is pushing hard for the project. Now, I mentioned this on Friday. So the BC Premier, Dave Eby, he's a little skeptical, and First Nations is not on board. They're kind of opposed. They're not liking it at all. So this is probably going to have a lot of controversy, but it is one of the ones on the list. Now, Carney, of course, campaigned on fast-tracking nation-building projects to offset some of the economic damage from the U.S. The U.S. tariffs and their overall protectionism. So the list, it does show he's serious about using big infrastructure, pipelines, ports, transmission lines as an economic stimulus to trade and a trade diversifier. I still want to see things moving forward. Beyond oil, so the list also includes critical mineral mines, some liquefied natural gas expansions, a few nuclear projects, and well, those port upgrades. So we know about Churchill and the Port of Montreal. And it does signal that Ottawa is attempting to blend some traditional energy with clean power and resource diversification. So that's interesting enough. Interesting enough for sure. Oh boy, I still want to see something move ahead. I like the idea of this pipeline. It's not the pipeline I wanted, but I do like this pipeline. But um, I think it's going to be a bit of an uphill battle. It's going to be a bit of an uphill battle right now. If he could get native leaders west on the west coast on board, that would certainly help. I'm not worried about the premier so much, but get the natives on board. Let's see if we can get this moving, because that would open up a huge market for Canadian oil. All right, guys, we're so far behind in the news. I'm going to do just one more before I get back to chat here. So, the EV mandate. We all hate it. And, well, it's now been delayed by, well, at least a year. So, Ottawa is delaying the electric vehicle sales mandate. So, this is basically, it was originally set to require 20% of new cars to be zero emission by 2026. That's just a year away. 60% by 2030, and then 100% by 2035. Right now, the targets are on a pause for at least a year, and they're going to be reviewed. So the delay, of course, is a direct response to U.S. auto tariffs, which are hitting Canada's auto sector really, really hard. Automakers, they kind of, I guess they kind of joined up and had a few conversations with Carney about it. They're arguing that the EV sales requirements are very unrealistic given supply chain pressures, cost, and the trading environment. Carney agreed and said that at this point in time, it's not worth it to put this extra pressure on the car companies when right now they're just trying to cope with, of course, the tariffs. Now, automakers, of course, have lobbied for this for a while. Pierre Poilievre, of course, he's actually very much on board with this. Of course, he wants it completely scrapped. He's not looking at a pause, but I'm sure a pause is at least a good start. So we'll have to see how this is all going to roll out. In the short term, yeah, it's definitely a relief for the auto jobs and the margins. Long terms, it will raise some questions about Canada's competitiveness in the whole global EV race. But honestly, I think right at this point, I think the economy needs to take center stage. So we gotta see where things are going. We gotta see where things are going. All right, there we go. 2 stories. We're a little bit closer. A little bit closer. We're still really far behind, but we are a little bit closer. All right. Cowboy says, will not link into anything too much risk. Hackers are everywhere. Insurance companies limit coverages on homes with smart thermostats. Really? That's interesting. I had not heard that, but it doesn't surprise me. Does DD journaling linking mean passive doing that for you? That's a good question. Like, I've looked at passive briefly, but I don't know it very well to know what's going on with it. So that I don't know. Jack says, we want single family homes again, not all these shoebox condos and apartments. Yeah, I mean, it's nice to have a home. That's not an apartment. Or condos are so small. It's like, why would you buy an apartment? That's basically, because, when you look at the rules, get rich short, late, but at the least first thing I did is hit the like button. Nice. I heard the like button. I should have some coffee. Jack says, only delaying it 1 year is just like pausing the carbon tax, only trying to get more votes for the next election. Yeah. Well, yeah, I think it's going to be, I'm hoping it's more than a year. I have a feeling it will be more than a year, but, I think, yeah, here's the thing. I would be more inclined, instead of saying, you have to have X number of cars electric by this date, I would be like create incentives for companies to do it and incentives for people to want to buy electric right now. And we all know this. We've been talking about this for years, right? Our grid, our grid is not ready. Even if these targets went through and were met, our electric grid is not ready for that amount of electric vehicles. And we're a long ways off. Here's the thing: a lot of times government will sort of try to change things, but the reality is, if it's a good idea, it'll change on its own for the most part. So we'll have to see. I mean, we'll have to see how this is all going to look. Cowboy says, leaked from the government, total BS, like delaying EV and carbon tax. It could be. I mean, it's a leak, so you have to kind of take it with a grain of salt. But, and at the same time, yeah, sometimes the government will leak their own stuff on purpose. And is that what's happening here? Maybe. It could very well be. I mean, look at the timing. It's just before the House reconvenes. So you could be right. You could be right. Bring back Castle Law. Jack says, then he will turn around and re-implement them with probably even more strict guidelines. I hope not. I hope you're wrong. I can't argue, but I hope you're wrong. Gursky says, I'm northeast Saskatchewan. It will be a lot longer than 2035 before I get an EV. Yeah, I mean, my understanding is EVs don't work that well in the super cold. So that could definitely be an issue for people in the prairies. Or the prairies, including Alberta. Heck, even the rest of Canada can get cold too. So, yes, we need Castle Law. EVs ain't gonna be digging mines. Need diesel. There we go. Whether the law is there or not, if anyone breaks into my home, they are not making it back out without being paralyzed. Oh boy. Yeah, I'm actually. Recently, I was looking at that. I watched a few videos. When I say recently, I was thinking sometime, probably before the summer. It's probably in the spring. And I was just like, I couldn't believe exactly how limited people are to defend their own homes if someone breaks in. So I'm like, it's almost like, I don't know. I mean, if somebody breaks in and, they have intentions of causing harm, I think at that point, I'm not saying that, I'm not saying you should be able to kill them or anything, but I'm thinking, there needs to be a good amount of leeway on what a reasonable response should be. That's kind of how I would say, but that's about all my opinion on that. All right, let's see here. All right, I'm going to skip any messages that are not directed. If you're replying to somebody else, it's being skipped because we're so far behind. Gursky says, I agree. Okay. Cowboy, chicken coops you rent from GOV is carnage idea of solving housing problems. Oh, chicken coops. I would not want to live in a chicken coop. Especially if they throw in the chickens for free. That would make it even worse. Michael, I'm thinking NVIDIA could dip back to 140 with the problems like China has stopped buying NVIDIA chips. It could be interesting. I need to probably look at them a little bit harder because I mean, if they drop back to 140, I think I want to do a swing. I think I probably want to do a swing at that point. Let's see. I hope Jack, me and you both. I don't work well in the cold weather either. Yeah, I hear ya. Michael's saying September should be more downside than Friday data. The Friday data should help tech move lower, being the most overbought sector. It'll be interesting to see. Like, it's funny. I think September is going to be a flat month, slightly to the green side, but, it could be slightly to the red side. Or maybe the market can do whatever it wants, right? Maybe we're going to have some really good buy the dip opportunities. That would be fantastic. CC, something interesting is happening. Environment forward thinking Europe has really scaled back its EV car incentives. Yeah. That is definitely for sure. All right. So does that mean they bring back carbon tax rebate? That's what got me investing in the first place. Yeah, I think that's gone. That's gone. You're not going to get that back. I mean, there could be supports depending on how the tariffs go. I wouldn't put it past the current government to throw supports out again of some sort, but I don't think we're ever going to see a carbon tax rebate again. Rory, oh, sorry, Cowboy, essential vehicle. Oh, that's in regards to Cummins. I don't know what that means. I don't know what a Cummins is. Um, Rory says, is that a brand? France doesn't care about environment. Almost every flat wall has graffiti scrawled across it. All right, the government is not for buying but renting. Welcome. Oh, I think I'm actually caught up. Amrit says, turning in late and not sure if covered. Air Canada Union rejected offer. I wonder if that will cause a nice dip. I missed out on before. Yeah. So yeah, they're still negotiating. The strike is not on. It's not on. But yeah, the attendants, the air attendants, they rejected. I think it was roughly a 99% voted against the last offer. So yeah, it's continued to go. Now they said that there isn't going to be any more disruption. They're not even in a legal strike position at this point. So I don't think we're going to see any further disruption. And as long as they continue to work diligently, I don't know. I don't think it'll impact the price very much. Even when they did have the strike, it really didn't impact the price that much. Cowboy, let's see. Reasonable is state of opinion. Need the ability to exercise all force necessary to stop crime. Okay, fair enough. Fair enough. I'm just the type if a kid breaks into my house, I don't want to end their life or something. I'll stop them, but I still, it just that's what I say is to me it's just when they sort of say okay if a person has a bat and then you hit them with something that might be unreasonable. They have to did they swing it at you? That type of thing. I don't know. I kind of think, you have to sort of, I think there needs to be a grain of salt thrown in there, and there has to be a lot of leeway for the homeowner, not for the person who's committing the crime, but for the homeowner. All right, so that is a diesel engine, 1,100 kilometers per tank. Electric car never got anything. It's not ever going to do that. Okay, fair enough. Air Canada, I think currently is at $19. Debating if this will be a decent swing opportunity. Well, I started at 19. I think right now we're about 19. If I remember correctly, we might be at $19.28. Well, let's find out if I'm right. Since we brought it up, I don't know. Let's see here. Air Canada. I'm wrong. We're at $19.23 or $19.24. I don't know. Well, yeah, the one up top says $19.23. So $19.23 right now. I'm going to enjoy this one, I think. Jonathan says, all force necessary to stop crime. We need RoboCop. There we go. Or just once we all have AI robots, they can just guard the house for us. Cowboy, they shouldn't be in your home, so swing away. All right. Now that we're caught up, we can actually get to the next news story. We got an Elon Musk story. Do you remember when we used to have what in the banana bread is going on with Elon Musk? Well, this is kind of from that era type thing. So Tesla's board, they have proposed a record-shattering $1 trillion compensation package for Elon Musk. It's the largest in corporate history. So basically, it's designed to keep him at the helmet as Tesla shifts towards AI, robotics, and autonomous vehicles. And it might even keep him focused on Tesla. That's kind of one of their big goals. So the details. So the package would grant Elon up to 12% of Tesla stock if performance targets are met. The targets include pushing Tesla's valuation to $8.6 trillion, which is nearly 8x growth. And this is over the next decade. So he's got 10 years to pull it off. Compensation, of course, is tied to market cap. operational milestones as well, like mass robo-taxi deployment and humanoid robot production. Elon will get no salary or cash bonus. It's all performance-based stock. So this is interesting. Why does it? Well, why does it kind of matter? It shows Tesla's dependence on Elon to drive innovation and investor enthusiasm. It comes at a time of slowing EV demand, which is we've already been talking about, and growing competition because, of course, China's got their BYD, which much cheaper, more easy to access vehicle for sure. And it also, of course, highlights Tesla's pivot from EV company to AI first technology company. If successful, Tesla could become, if he can pull this off, it pretty much means Tesla will be the world's most valuable company. But, there's always the risk of dilution if he, if they have to start printing shares to do it as well. Because, where they have to give him 12%, that's kind of that downside on the other side. They're probably going to use dilution to pull that off. Of course, critics to this are kind of worried, saying, how could you keep Elon focused? He has too many distractions, everything from X, Twitter, SpaceX, Neuralink, and, people who are supporters are saying he'll want the money. He'll want the money. I mean, is being one of the world's richest men not enough for Elon? Maybe not. Maybe not. So it's kind of an interesting. So this plan is actually 18 times bigger than the one they had for him in 2018, which is still under legal dispute. So there's always governance concerns with this. What can I say? All right. Let's switch to this is another story. I love this story. So Bird Construction. I've been talking about Bird for a while. So they've made an interesting move. So they're acquiring Fraser River Pile and Dredge. Their ticker is FRPD. So this here is Canada's largest marine infrastructure and land foundation company. They're basically paying $82.3 million. The deal is expected to close Q4 of this year, so before the end of the year. Why are they doing this? Well, there's a huge strategic angle to it. So for one, it's going to add marine construction and dredging expertise to Bird's portfolio. It's going to expand their exposure to port expansion, trade corridors, and energy projects, which all just happen to be priorities under Ottawa's new Building Canada Act. Oh boy, this does make me even more bullish than I already am on Bird. This strengthens Bird's infrastructure vertical, its fastest growing business line, completing its industrial and building divisions. It's given them a bit more bite for sure. So the deal already, immediately, we saw a little bit of a share jump when they announced it. There's a lot of upside on this. So we're looking at it's going to be very good for their earnings. There's going to be a lot of potential upside from the synergies and some of the cross-selling, because they're going to be selling back and forth to their own company. Because once they own it, once it's official, Bird is basically positioning themselves as a key player in nation-building projects. This is what I've been saying now for months. From ports, defense to clean energy, they're ready to do it all. They're ready to do it all. Infrastructure is one of the few sectors that have really strong secular tailwinds. So we're talking government spending as well as private demand. We got both. This is going to be good for Bird. The only little tiny snag is that they still need regulatory approval for the purchase. We think there doesn't appear to be any issue with that, but they need to get it rubber stamped. So as I said, that share did jump. They were sitting at $23 before the announcement. Then they jumped immediately up to $25, and now they've moved up to about $26. So that is not too shabby. All right. Holy banana bread, guys. 17 messages. Well, I did 2 news stories. That's cool. All right. Jack says, if they break in at noon and are a 10-10, I might just down on one knee and... Oh, boy. All right. Jay says, speaking of crime, there is a person driving in a minivan stealing downspouts. Is one heck of a drug, whatever they're downspouts. Like, all right, people will steal anything. Elon should send himself to Mars. Okay, I wouldn't mind seeing Elon on a different planet. Paul says, did you use any free TradingView community indicators looking at CS sideways buy sell? I haven't really been using their indicators per se. I do a lot of my own charting when it comes to my charting. All right, Tesla is going to lose to Google and Waymo. They might. Like it's a lofty goal. The whole compensation package. I don't think Elon can pull it off, but at the same time, every time I think Tesla's down and out, Elon does find a way. Will he find a way this time? I don't know. Oh, it could be interesting. Cowboy, Tesla not something I'm into. He's smart, but have no interest in electric cars. But that's the thing. He's not really. They're pivoting. Like Tesla itself, they've been pivoting, and Elon's been going on saying that Tesla is not a car company, that they're an AI company. So they're kind of moving away from a lot of. Now they still have that car side, like all the autonomous stuff, and Tesla's still there, but it'll be interesting to see. I think we need to see more before we can really make any judgments. Bismarcky says, don't think BYD will be allowed to sell in America. Oh, interesting. It's hard to say. I know right now there's a lot of sanctions. Well, not sanctions. Sorry. Canada has like a 100% tariff on them, but it's hard. It is hard to say. It's hard to say. Like if Canada and China's relations, if they get better, and it's not looking that way, not after the whole canola thing, maybe. But yeah, who knows? Who knows, Bismarcky? Elon says. Or sorry, Paul says Elon completed the other package before. Yeah, he absolutely did. Rory's calling Elon the perfect Bond villain. Okay, why not? He just needs a cat. I'm worried the fairest competition with Waymo will have safety skipping occurrences. Yeah, I hope not. This is the thing. Especially with self-driving cars, it's like I want them to be much better. As safe. If you think they're safe, make them safer. That's the way I would say it. Emirates says, you are making Bird very enticing. I know you're bullish on them. I wonder if decent time to start a position. Bird says, Michael says, what is Bird? What is Bird? Rory answers, Bird is the word. Yeah. Bird Construction, Michael. They're a big construction company. They already are very good at getting government contracts. They have a lot of government contracts, private contracts. They've involved, like, for example, a lot of the LRT construction in Ottawa. Bird was in on that. Bird's in on a lot of stuff. And this is just making them more able to get in on a lot of the other projects that perhaps they may not have gotten any of the port stuff because they didn't have that wasn't completely in their wheelhouse. Well, now it is with this new company. So BDT is the ticker if you want to check them out. But and here, let me pull it up here for a second. BDT, because I told you what it did. But let's actually look at it. There it is right there. So this is that announcement right there. And as I said, after this announcement, they continued to go up. So right now, 26.25. But yeah, Bird is, and I've been talking about Bird Construction pretty much the whole year, telling people this is a good company. This is one of my picks for sure for companies of the year. I don't want to say of the year, but companies that I'm long-term bullish on. So yeah, let's see, and that is to CC, so I will pass that. Paul says, why is Waymo having so many accidents? Well, it's one of those things, right? When it comes to any kind of technology like this, there's a lot of accidents. Look at SpaceX right now with their Starship, How many times has that thing exploded? I think the last one's the last one that actually didn't explode. Um, a lot of times, it's a working progress. Like you take autonomous vehicles 10 years from now, will make these ones look like death traps compared to where they'll be. Not to say that these ones are death traps, but compared to where we'll be in 10 years. All right, Cowboy, they still have to be the winning bidder. Yeah, absolutely. There's still a bidding process. Um, and that's the thing. And they are very familiar with the process, so I think they have a good idea on how to be the winning bidder, and that's fine. That's fine. I think they know. I don't know anything about bidding. I've never bidded on anything like that. But yeah, SpaceX is going to the moon. Yeah, they are. Literally, quite literally. Paul says there is an investor proposal for Tesla to invest in XAI at next shareholder meeting. Interesting. It is interesting. Now, Grok, even Grok. So that's part of X. It's not bad. I like Grok, but at the same time, actually, there's one I've been playing with recently. What is it called? Nano Banana. Nano Banana. Of course, it's got banana in the name. I'm going to be there. But I've been playing with it a little bit because, it's just really good. I might actually be able to make some more creative thumbnails with it. But, yeah, Nano Banana, definitely something to worth. And that's one of the Google ones, actually. That's part of the Google AI Studio. Rory says, I can see Elon building space stations orbiting the planet for the wealthy. That wouldn't surprise me. That really wouldn't surprise me. What does Bird trade under, and can you type in chart under? Well, BDD. Here, look, you know what? Here, I'll grab you the link here. This here is to the TMX page. And I'll just drop that right there for you in the chat. There you go. Tesla extending robotaxi to more cities is forcing Waymo to do the same. Waymo is now going into the oncoming traffic or hitting other vehicles or buses. Yeah. And that's the thing. In this case here, I don't blame Tesla. I would blame Waymo. It's like, yeah, you want to keep up with them, but you don't want to skip safety concerns. And, there's only so much chaos these vehicles can cause before government will step in and say no. So yeah, let's do our homework, guys. Let's do our homework. SpaceX is making fuel transfer in space now. 2 rockets will dock in space. That's kind of cool. And now the interesting thing too is, and one of the reasons about getting to the moon is once you can get to the moon, once we have a permanent base on the moon, there's a few things like, there's water on the moon. That water, it can be used. It can be used for a lot of different things, including, and I thought I heard this somewhere, and I don't know the full details, but I believe you can actually make rocket fuel using that water, and then you only have to carry the other chemicals with you. So that's a lot cheaper to bring that from Earth and then make it on the moon, and then, you can take your fuel from the moon. That's also less gravity. It's also a lot cheaper. So it is very important to get a base on the moon for many, many, many reasons. All right. Jack says, let's see, Tesla has had how many at-fault FSD fatalities? More than I can count. I have no idea how many. I honestly have no idea. Grok is in the cars now. Ooh, interesting. Will Bird be the next London Gold? No. Bird's more of a slow burn. And London Gold, and this is the thing, I'll say this right now. Once we get to the end of all of the chaos, London Gold is going to come down. So if you are taking that ride, I would have a plan for when we get to the end of this to be taking profits. I don't think it's anytime soon, but I would have a profit-taking plan with London Gold. And I love London Gold because, it's going to do fantastic things. And this the run that gold is having, it may very well, it might even go all the way through next year. We'll have to see. But yeah, keep that in mind. Now, Bird is one of these companies that I think, you can hold them for a very long time. I think they're going to be consistent. Like, I think most of the big stuff with Bird, like, I think we're going to see a consistent movement to the upside, but I think most of their big growth will probably come probably 2026, late 2026, maybe 2027. That's where I'm sort of seeing that. Because, yeah, I mean, there's still, like, even if we get these infrastructure things going, there's still a whole process before companies start receiving money. And, that you got to keep that in mind. Let's see, PCL is a big construction player too. Aecon, there are lots of competition, and with Carnage in the PMO, Brookfield will be awarded plenty on single source contracts. There's definitely, I mean, there's a lot of different companies, and I think the whole sector is going to, it's not just, Bird's not getting everything. There's going to be plenty for a lot of companies to do really, really well. Bird's just the one that I fundamentally have attached. I don't want to say I attached myself to, but they're the one that I like the most. But Aecon, I think, is going to do really, really well as well. And there's also some really good defense ones too for the North. So yeah, there's definitely a lot to look at. And actually, I just recently did an infrastructure video. I mean, so if you want to check that out, there's a few companies in there as well. Like, let's see here. I think Bird's in it. Aurora, PCL built the Rogers Arena in Edmonton. Okay, nice. Bird ain't real big. They were mostly sub when I was working for Mac. Yeah, they're not. They've been growing. That's what I'm getting at, is that they are growing. That's one of the reasons that I do like them, is they've got that room to grow, and they have been making the right moves. That's where I think the big profits are from when it comes to Bird. Paul says, of course, when Elon describes the 2 rocket docking in space to refuel, he made a joke about that, like mating in space. Leave it to Elon to make a joke. Amrit says, I'm not sure if I should jump into London, as it's pretty high, around 93, I think, but been doing a DCA and GLCC. Yeah, and I love GLCC. That is a gold ETF, and that's fan. I think you're going to do fine on that. Yeah, if things start, and this is the beautiful thing with London, or any of the gold companies really, as soon as the markets have a nice little run without any volatility, without any downward, whether it be a Trump-induced spike, then gold starts to sort of fall back a little bit. And if you're looking to DCA in, I would look for it to fall back a little bit before it makes its next run, as soon as we get any more worry or bad reports dropping, all of that fun stuff. All right. Oh, and I'm caught up. That means we can go to the next news story. So where are we at? We're almost there. This one's a pretty short story. So Doug Ford. So yes, Doug Ford actually dumped out a bottle of Crown Royal on the air. He actually stood there and dumped the entire thing out. He complained that it wasn't coming out fast enough when he was dumping it out. But this is all over, well, it's all over Crown Royal's parent company. They're called Diageo. Basically, they're looking to close, they're closing their plant in Amhertsburg, Ontario. So this is a bottling plant that has about 200 jobs at it, and those jobs are being moved to the US. So he's not happy about that at all. He's saying economically, we're looking at 200 people in Amhertsburg that are losing their jobs. And normally, and this is his argument, he says Ontario does $740 million in business annually with Diageo, compared to that payroll of about $16 million at the plant. Ford says the company is jeopardizing far more than it saves. And he was making kind of a public appeal to not buy Crown Royal. So, and Diageo, their response is that the whiskey is still being mashed, distilled, and aged in Canada, but bottling is just moving south for efficiency. So that's what they're saying. They're just trying to be a bit more efficiency. Ford basically then, and this is great. So Ford then called them as dumb as a bag of hammers and threatened to consider pulling Crown Royal from the LCBO shelves. He sort of framed it as a bigger issue all around Donald Trump's tariffs, even though the company said that had nothing to do with the tariffs. They were just doing it for efficiency. But this fight, it certainly highlights the tension between protecting Ontario jobs and the realities of some of the global supply chains. I think it's interesting, but like I said, Diego completely denies that it has anything to do with it. It was a big grand. It was actually funny to watch. I watched it. I will admit, I thought it was kind of amusing. A little bit of a I don't know, shock YouTube, I guess. So what can I say? And all right, we'll get our last story out of the way. Wanted to just sort of check in with Via Rail. So we had this Canada Strong Pass over the summer, and well, let's see how it worked out for Via. So this was a federal initiative that ran from June 20th to September 2nd, and it did amazingly well. They picked up 50,000 or more bookings, and they're saying it saved Canadians $6.6 million on fares, and it boosted Via's ridership by 6.5% year over year. So beyond tourism, this simply showed that targeted government subsidies can stimulate demand in transportation. It did strengthen domestic travel spending and provided relief for families during a period of rising costs. Interestingly enough, the Canada Pass was used in over 43 million kilometers traveled. That's kind of cool. So about 9,000 trips across Canada. Via, of course, they benefited big time from the higher ridership. And that, of course, when you got more people on the trains, it does improve utilization and potentially reduces their per passenger costs. So Via made money from this big time. So it worked for everybody involved. And I would love to see them do it again. I'd love to see them do it again. Riding the train is not, it's not cheap, and it's also pretty fun. I don't know if you've ever ridden the train. I love the train personally. So now Via itself, they are Crown owned. So we can't invest in Via Rail, guys. We can't invest. We can only invest in, of course, CNR and CP Rail or CPKC. But it was a boom economically for a lot of communities. And it was nice to see that this actually worked. All of that fun stuff. All right, now, coming up this week, Canada, not a lot. U.S., we have some of the inflation reports dropping. So Wednesday has the PPI. Thursday has the CPI. Earnings-wise, up here in Canada, Empire is dropping their earnings. In the U.S., Adobe, Kroger. So yeah, anyway, it's going to be interesting. And of course, all eyes are looking forward to September 17th, the rate cut decision. So we will have to see how that's going to look. We still got a little bit of time. We'll be talking more about that next week, no doubt. All right, guys, that is... Oh, I just realized I didn't go to the news screen when I did it. I did it on this screen. All right. Well, you know what? Yeah. It's the news. It's a live show. These things happen. What can I say? All right. Now it's just you guys. We'll ride this into the end together. Cowboy says every air base needs new hangars because of the new jets. That's going to be a multi-year contract. Plus, old hangars need to be removed. Yeah, absolutely. I made a small swing trade with Bird, says Gursky. And let's see, Doug Ford might as well be a liberal. Yes, I've heard a few people say that. I've had a few people say that for sure. Bismarcky, gold would be good for another 3 years with Trump around. Only Trump can bankrupt several casinos. Yeah. Well, that's the thing. Trump is a good source of volatility for sure. That plant is pretty close to me. Interesting. All right. Amrit says, I wonder if Crown Royal is listed in Canada and maybe this year have a little dip to get into it, but I don't know. Any swing opportunity here? I don't know about that. I don't think Crown Royal would be listed in Canada. I have a feeling. Doug the Slug. Yeah, yeah. I actually have on my my workout playout list. It's all 80s stuff. I got a couple of songs from Doug and the Slugs on it, so that's always funny. And that's probably because we were talking. You guys know how we go. Occasionally, we go on tangents about the 80s, and you guys start telling me all your 80s songs you love. One of those tangents, Doug and the Slugs, came up, and that's when I was like, "Oh yeah, Doug and the Slugs. I should add a couple." So like making it work is there, for example. Jack says LCBO is corrupt already. 7 million in products stolen annually, and they hide it because they personally profit off the tax. Oh boy. Yeah, what can I say? Avia is subsidized another waste of tax dollars. Jack says, not a bigger waste than the CBC, though. The poor CBC and the VIA. Oh, well. I think we need trains, but the one that's actually got me the most excited is that high speed from Quebec to Toronto. That one could be very, very interesting. And that's actually one of the ones, I believe that one is on that list of 32 projects. Let's see. It's on the bucket list to take via across Canada. Yeah, absolutely. I recently, probably about 5 years ago, I took it from Halifax to Toronto. Well, technically Halifax to Toronto, but we only got as far as Montreal. And there was some kind of issue with the track or something, so the train couldn't go any further. So then they put us on a bus. And I was like, that sucked. The bus from Montreal to Toronto. It really sucked. I really, but now mind you, I did have a cab in the train, so I got to sleep. I had my own little bathroom, and it was good. All right. Have you ever well, yeah, I just did. Yeah, I just told you that story. Yeah, so CNR owns the tracks, and you're right about this. So CNR can cause delays for VIA. It's one of the reasons that on time, yeah, not often. Because yeah, if a CNR train is behind, they've got to wait. They're sharing the tracks. And trust me, you want to wait because the consequences of not waiting are, well, newsworthy. Kelly says, thanks, Candace. Cowboy, let's see. Rode the VIA from Prince George to Jasper was more staff than passengers. Total of 3 passengers. Oh, wow. The only thing is riding VIA through the mountains is actually pretty cool. They've got some really interesting tunnels, too, in the mountains. Let's see. Making it work should be the goal of the government. People need to work. Well, yeah, 7.1% of us are not, apparently. So... used to be at CN. It's always a clown show. Issues always come up. Yeah, absolutely. All right, guys, we're almost there, guys. We're at like 2 hours, 38 minutes. If you got your last minute questions, get them on in. Get them on in. Coming up this week, by the way, we've got that Windfall. The Windfall series is starting. So it's going to be a hybrid portfolio on Tuesday. Monday, tomorrow, you'll be able to see it if you are a channel member. And... Wednesday we'll be back here for another live stream with this week. With the market close. Now there is going to be. I'll give you guys the date here. Let me get the date. In October. Oh, there we are. Oh, it's early October. I thought it was later October. October 12th. There's not going to be a show. So October 12th, I will be showing my mom around Ottawa. So there will not be a show. She's just here for the day. So, well, she comes in Saturday night, leaves Monday morning. So Sunday's the only full day. But yeah, so there'll be no show on the 12th of October, but I will put that on the schedule. Those of you who don't know, there is a schedule on the Facebook group page, as well as the Discord. And every so often I do post it as well in the comments. I'll update it early this week. I'll put October on it as well. And then I'll post it for you guys in the comments so you guys can see the schedule. All right. Cowboy, CN was the crown in the 1980s, I believe. Oh, let's go big screen. All right. Yeah, absolutely. So, all right. Looks like we're wrapping things up here. A huge shout out on the way out to, of course, Paul with his 2 supers, and Gursky with a super as well. Always appreciate the support. Guys, I will be back here on Wednesday. It will be a fantastic show, no doubt. I'm sure we'll have lots of things to talk about. Until then, enjoy the rest of your weekend. And, happy investing. Let's see if we can find, maybe we'll get a buy a dip this week. Who knows? It'll be a fun week. It's always a fun week on the market. Until Wednesday, guys, enjoy your days. Bye bye.